Boy, what a week we had last week. Lots of news coming out. We had the news on Monday telling us the Iran war was over. Market pumped higher. Then we had 2 days of interest rate news, one from Japan and one from the US FOMC, telling us that, Japan raised their rates, which affected the yen carry trade, which we talked about last week. And then the US paused rates. So that means US rates are going to stay high. And then Thursday, we had options expiration, short trading week to celebrate Juneteenth. So we ended the week where we were up just slightly more than we were the week before, but we were starting to see turns of a downtrend. So I'm the Wall Street Yardie. This is the weekly market report. This is where you get to know what to watch for in the market this week before you start taking any kind of trade. The first thing we're going to talk about this week is just some quick macro events. There are a couple things coming off of the Fed meeting that we need to pay attention to because they're going to affect kind of how the summer starts to play out a little bit. So we'll touch on those things. We're going to touch on a couple earnings I'm watching this week, not too much. Kind of quiet week on the earnings front. And then, of course, we're going to get into the SPY and the QQQ levels. I'm adding the QQQ this week again because I've been seeing that the Qs have been moving a little bit bigger than the SPY. So for those of you trading more short-term things, I want to just give you some levels to watch there as well. But I'm always watching the SPY because that's the bigger market. That's where all the bigger companies are. QQQ is more on the tech side, that big AI trade. That's what we want to watch there. So depending on how you trade it, I'm going to give you both sides of the levels and then you can decide what you're going to do as a trader from there. And then lastly, I'm going to show you a quick tutorial on, how to read the trend on the chart, right? Just keep it very simple, plain charts. We're going to be using TradingView charts because that's the universal chart across whatever platform. Doesn't matter what you're trading with, whether it's Think or Swim, Robinhood, E-Trade, Webbull, whatever it might be. When you start using one central charting platform, you can switch brokers very easily. It doesn't matter at that point. So let's jump right on in and see what we need to watch for this week. Okay, so just getting right into it, right, with the macro picture or the big picture in the market. What we've been seeing is a lot of news. War is off, war is on, Strait is open, Strait is closed. Boy, I tell you, you can't try to play this. You can't try to watch the news to figure it out. It's just a lot of whipsawing up and down. If you try to play it on either side, you might get caught on the wrong side of it. I would probably just try to stay away from that altogether and watch more of the bigger news around inflation and the economy itself, right? That's really what's going to drive the summer, in my opinion. As you can see here, Polymarket is already, playing out kind of what the scenario is going to be for the July Fed meeting. What they're showing here is that there's probably going to be a pause here in July with a 79% chance that rates won't go higher, but it won't go lower as well, right? The market wants lower rates, but I don't think they're going to get it this summer. I think it's going to be until September before you see any change. And honestly, in September, I think the change you're going to see is actually a rate hike, which is going to be even worse for the market. So we're going to stay vigilant. We're going to pay attention to what's happening in the market week to week, month to month, and then we're going to adjust our trades and protect our portfolios accordingly, right? So the price of oil this week did get below our $80 target, but it didn't really stay there too much because as the week progressed, we learned that the MOU for opening the Strait wasn't as strong as everybody thought it was, right? So that's what we want to pay attention to there. On the earnings front, we only have a couple earnings I'm paying attention to this week, strictly because they both go into the idea or the theory I was just talking about of watching the inflation. Let's not pay attention to what's going on with the Strait per se, but let's pay attention to inflation and how long that sticks around. So the first earnings I'm watching is FedEx. FedEx has earnings after the close on Tuesday. Once that happens, you want to see how strong they project their earnings. Do they think, the shipments and transportation and everything of goods are going to continue to stay strong? Do they see their earnings growing from that kind of traffic? And that's what we're paying attention to for FedEx. And the next one we're going to pay attention to is Micron, which is also huge AI play. So can Micron continue its crazy strong run? This one is up monster levels, right? They make the memory for the AI. So we want to see what they're saying as far as inventory and orders and long-term orders that they might be able to lock up through 2028, because they're actually kind of out of chips until 2028. So you want to see if companies are still ordering beyond that. And also hear from them whether or not their growth is going to continue. So that's going to go into the strength of the AI trade. So those are the two earnings I'm watching this week. FedEx on Tuesday after close and Micron on Wednesday after the close. If you like what you're hearing so far, give me a like, give me a subscribe, link me in the comments. Let me know if there's a stock ticker or something in the market you want me to touch on. I'll be more than happy to do that. All right, as you can see here on the chart, I'll slide over a little bit here. We got, a nice big jump on Monday after the news that the war was over. Small green candle there. If you notice, we watched the volume on this. It was a little bit above the recent averages, so that was kind of bullish. But the next day, we got the pivot that we were talking about last week. Last week I told you, you need to watch to see if we're going to get a lower high compared to what we had in the all-time high back here in June 2nd, right? So what ended up happening is after our big gap up, the next day we had the Japanese rate hike news, which I think affected some of this to come to the downside. But more importantly than that is, as we're watching the charts and we're reading these candlesticks, you want to see where we get a high like we did on Monday, and then the next candle we had a lower high and then also a lower low on that same candle. So now we get, this is what I would call a pivot point. This pivot point is here at 756, which is obviously lower than the 760 we had back early in June. We're going to be paying attention to this pivot to see if it holds. The other thing I was telling you to watch last week was the 20-day moving average. If I turn that back on, that's this yellow line that I have here. You see we closed actually below my 20-day moving average here. 20-day moving average closed the week at 747.08. SPY actually closed at 746.74. So we did not hold that level, and that was the level I was telling you to watch. So that gives me pause. The only reason I feel that this candle even got up to the middle here was because it was expiration day for the options market. A lot of things had to settle out. So as you can see, the candle was pretty small. There was not a big move there, any kind. There's a lot of volume, but that volume is kind of distorted on that day because, like I said, the options market is settling a lot. So there's going to be a lot of volume. There's going to be a lot of what they call rolling, new positions getting put on for the next month or maybe for the next 2 months. So you're going to see a lot of volume on that day anyway, regardless. So we're not worried too much about that volume, but it does match up to a red candle, right? We opened higher, closed lower. And then the day before, we did have a big red candle with heavy volume on that one as well. So if you're watching and paying attention to the volume, I've spoken about this for several weeks now. Volume has been dropping like a rock. And now we're trading at these lower volume levels, meaning folks in the market are not coming in and trading. They're not adding to their positions. They're not selling either, which I think is what is driving this, continued move up. Is buyers are stepping in. I think retail traders are stepping in and kind of forcing the hand of the market a little bit to go a little bit higher. But there's no institutional strength per se, because as you can see here, this volume here from April is really flattened out big time compared to the rest of the year, all the way back, which I talked about in another video. But you got to watch this volume, and as the volume is increasing here, notice it's increasing with a lot more reds than greens. So that's telling me the volume is increasing to the downside, and that's what we're going to talk about in the tutorial towards the end of this video. So from my levels for this week, what I'm looking at is coming back to 725. If we can't hold 725, we'll break through that. We're going back to 700. I think we're going to see 700 level maybe mid-July. That's what I'm thinking here. But we certainly have to watch the trend to see how that plays out. We have to see if it breaks this low here, which is our 725 level. If we can close below that with higher volume, then certainly we're headed that way. So I think for the next week, maybe next 2 weeks, we'll trade here inside this range of this 740, 725 for a little while, just to see how maybe the news around the war plays out, how the news around inflation plays out, because that's going to be a big one. Are gas prices going to continue to stay high? Are they going to come down? We really don't know. We just have to kind of wait and see, and then we'll react to the market that way. But 725, maybe even our 50-day moving average here, which is now sitting, call it 730, right? So I'm calling for a few points to the downside, 15, maybe 20 points to the downside here. So that's what we're looking at on the SPY. All right, switching on over to the Qs now. Looking at this chart, you can see I have no levels kind of marked up here. So we're going to do that. I'm going to show you how we get that done. We're now, we touched on all-time highs up here. So we really couldn't figure out where we were headed or what the target was just quite off the bat. We had to use the previous all-time highs. So I didn't really mark up the chart yet. But what we're going to do is we're going to go on over to our handy dandy Fibonacci retracement. We're going to create some anchors there. But before I do that, I just wanted to point out this gap here. We have a gap level at 682 that we still haven't filled. As you can see, the other gaps that we have on this chart, there was a gap up here, price pulled back. Even this gap down, price came back and up. And we had this gap from last Monday from the news of the Iran war, and we sure enough filled that gap as well. So gaps fill quite often, and you're going to see that they fill, especially when they're smaller and close by. Price likes to revert to them, test that level, and come back. So this level right here, just right off of the bat, it could be a good buy level for you if you're buying the Qs, if this is something that you invest in, right? So this might be a good level to do some dollar cost averaging, buy the dip right around this level. So you want to pay attention to that. But let's get some levels above going. Let's switch on over to our Fibonacci tool here. Going to go ahead and grab the anchor here from March 30, and then also our all-time high, tag it to that, and then see what we get up and down, right? So as you can see right off the bat, our gap here is very close to our 618 level. 618 is a very important pullback level on the Fibonacci. Whenever you put a Fibonacci on, you like to see price pull back to the 618. Oftentimes when it does, there's usually a nice big bounce and rebound higher. So again, right anywhere between the 682 and the 674 might be a level you want to pay attention to see if price bounces. It comes on down here and then starts creating a higher high and a higher low on that next candle after it touches that area. So you're going to pay attention to that. So what we're going to do now, though, is we're going to go ahead and drop some lines on the chart so we have our own levels here and not clutter our chart with the fib all the way. So I'm going to drop one here at the 786 level, which is 707.34, which is the next level below our current price. So that's why I'm using that. And then we're going to go do the one here right at our top anchor. Of course, that's the all-time high we had. I'll just actually anchor that to the all-time high instead. And then the next level above that, because we want to know if price bounces, and I'm going to show you why I'm actually going to add this one. If price bounces from here, I want to know where we're going to go to next. And it looks like 800, 801 might be the next level. So 1272 is the next Fibonacci extension level that we're going to be watching for there. So I'll just drop that right there at 801. And then we're going to go ahead and clean up our Fibonacci. It's getting way too busy down here. I don't like when my chart gets this busy, so I need to clean up some lines. We could do that there. We could probably even clean up some of these lines below. We still have some open gaps here we haven't filled yet, but we'll get back to those. And then we'll take off our moving averages. Right now, you see price stayed above the 20-day moving average. Unlike the SPY, the Qs actually closed the week on some strength here. You can see the volume. Like I said, yes, it was option expiration Thursday. So the volume here is a little less significant, but you know, we did have strong down volume on the 2 days here, but volume is headed up, and then price is also pivoting back up here. So the Qs is giving us a little different read than the SPY, and that's kind of why I wanted to show you that this week as well, because there is starting to become a little bit of divergence there, and we want to pay attention to that because there might be an opportunity to go to the upside on the Qs while the SPY maybe sits around and stays average. So cleaning that up a little bit there, taking off our moving averages. Take a look at here is after we pivot down here, and we created this lower lows here, but we didn't get down to our gap. So that's the part why I'm still watching to the downside. But when we did come back up, we gapped up here on Monday on the news and pulled back and filled this. Last Thursday, we closed this pretty strong, right? So this is a higher low than the candle before and a higher high. So this is the lesson you want to pay attention to with the candles, is where are we pivoting, and or are we just going to go sideways here, right? So we do need a little confirmation on Monday. When the market opens, we're going to pay attention to what we do next, right? Do we continue to get a higher low here and a higher high, or are we going to pull back and stick in this range? So we're kind of in limbo. We need some confirmation on Monday before we can decide whether we're up or down. So that's what we want to pay attention to there as well. So to the upside, we're looking at 801. To the downside, we're looking at maybe 707 or worse to come fill this gap at 682, which is, if we go down, I think we're going to head towards this gap to fill the gap. And then once we do that, we have to see what's happening. If we're bouncing off of that or if we're flying through it to go back down to our previous all-time highs down here at 637. I don't know that we're going to get down here in a short period of time, given the ups and downs of the news. So we're going to stick with these two closer levels here, 801 to the upside, or let's call it 682 to the downside is what we're looking at here for the next week or 2 weeks in the market. So I'm going to switch back over now to the SPY and just kind of talk a little bit about the lower highs and the lower lows and kind of how that plays into it. Now, on the SPY, we've been seeing this big run, just like we saw on the Qs as well. But the thing that caught my eye last week and made me feel like we were heading lower was the fact that we did get this pivot low, right? And then when we made all-time highs, we came back and we broke that low. Whenever you see the market start to change structure like this, where we start to make lower lows, right? That's because this low here is lower than the low we had here. That's when you start to think about, okay, is the trend changing or are we just going to go sideways? So the thing you want to watch for is, do you get a pivot here, right? If we had continued last week and made a new all-time high here, then this lower low would not be so significant. But because we pivoted lower, we got up to this high and then started getting lower highs and lower lows again, you start to see the market coming back down. Now, we got this indecision on Thursday. We got to wait again on Monday to see which way we go. Are we going to go higher up to 766 or lower? But if we at any point close below this 725.04 level, which was also a gap fill, then I certainly see us dropping right back on down to 700 level, 697 level. Why? Because the market and the charts have told us that now, not only did we create this lower low, but we're also creating a lower high. So this lower high then starts a whole new downtrend where we then need to go and find another lower low before we could start deciding where the trend is headed, right? And then if that lower low gets created here and we end up with another lower high and come back down, we could see even more pressure in the market and head lower than what we're talking about at the 700 level. So this is how new trends form, right? You start to see the lower low, then you got to watch for, okay, is the next high going to be lower than the high previous to that? And indeed, we have that today, and that's what we're paying attention to see if that holds. Now, if price gets above here, closes above here, then, the whole shift to the downside is over with, right? And then we have to pay attention to see if we can break the all-time high, close above that all-time high, and that's telling us we're certainly headed higher. And if we don't do that and we just kind of hang out in the middle for a little while, which certainly can happen, we saw that happen for a long time here back between December and March, then that's what we have to pay attention to, and that's what we have to work with, is this sideways action for a couple weeks. So that's what I wanted to share this week. I'm the Wall Street Yardie. Stay tuned for next week. We got some other videos coming this week as well, but in the meantime, if you have any questions on what we talked about today, for sure, link me in the comments. Let me know what you're looking for. If you have any stocks you want me to go over, I'll be glad to do that for you as well. All right, have a great trading week.